me. It's great to be here, and thank you everybody for coming. It's always a pleasure to share some experience. And you've heard some great indicators and some great other stuff. I caught the end of Jody's and very solid information, and you'll find out one of the consistencies between everything we do in markets plus what we're going to talk about today. So anyways, I like to talk about micro minis, and I talk about them as the next big thing because it's the futures market, and it's a product that came out a year ago from the CME. But I'm going to show you what we do with them, and certainly answer all your questions and be ready to rock. So anytime you have questions, throw them in there and I'll get to them. In the meantime, before I can do anything, okay, I have to show you my disclaimer, okay? And of course, there's always risk, which is always a part of it. So in the meantime, to introduce myself, I'm Todd Horowitz, Todd Bubba Horowitz. I've been doing this for 41 years. I was a floor trader for 31. I've been a screen trader for the last 10. I really contribute to all the major networks, and every recommendation that leaves this office is also traded by myself. So whatever I'm sending out is by me, for me, and for you as well, okay? And today, okay, we're gonna talk about whatever our objectives are, manage futures in a new way. It's always the math, the portfolios, how you can take advantage, and of course, I'll take all your questions that you have, and they can be about anything, but I will answer any of them. In the meantime, the first thing that I always go through with everybody, because no matter what you're trading, no matter how good you are, you're going to have drawdowns in this business. Okay, the key is understanding how to take advantage of those drawdowns when they come, and stay emotionally balanced throughout the entire situation, because that's something that many people struggle with, is the emotional things that happen when you have a drawdown. But if you know how to use a drawdown properly, it actually works out to be a new profit center. So again, understand there's going to be losses. You could sign up today and be a member, and you could have a loss tomorrow. But again, year after year, long after long, we make money regularly on an annual basis, on a monthly basis. But again, I'm going to show you all the results as through today. So when you have to, there will be no questions. You'll see them exactly as I show them every week to all of my members. In the meantime, we are doing algorithmic trading. We have our own proprietary algorithm, which has been in 120 years in the making, basically. It's 40 years of a few guys' experience of understanding floor trading, chart trading, all the technical things that people are looking at, but we just believe in using the algorithm because A, it's easy, B, it works, it keeps you in, and it's very similar to, if you remember Richard Dennis, the Turtles, it's very similar to what he did, okay? We're using trend trading and a model that just simply works. And of course, I used to trade with Richard on the floor of the CBOE in the early 80s. So at the end of the day, again, it's about mechanical algorithmic trading. And again, it's the easiest, most fluid way to be involved in markets at all times and not have to worry, knowing that if you're wrong, you will eventually reverse anyway. So it always works out to your advantage. And that's always things that we're looking to make sure that our members have an advantage, because again, we're in the trades as well with you. Now, mechanical trading, okay, the major reason traders lose money in the long run is because what? They miss trades, they let losses run in the trades they're in, and take profits far too early on the winners. I mean, has anybody ever done that here before? I mean, I know it happens all the time. So again, it's human nature which drives the markets to begin with. It's human nature that creates all these indicators that happen in a market. So understanding that, and understanding that you are in a competitive business, if you just follow the rules and do what you're supposed to do, you don't have those problems anymore. My method is none of the three, therefore our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in any market. We do not let losses run, and we always let profits run. That is because the algorithm was designed exactly to do those three things. Now, why mini micro futures? Well, the reason micro mini futures is because A, there's a capital efficiency, right? Many people are afraid of the futures markets, and I'll explain to you more the difference between micros and regular futures, the diversity of classes, the way we use them, your fees and commissions, and of course, the big one, it's always the FINRA day trading restriction for those who have less than 25,000 in their account. So we're always mindful of all these things that the average person goes through when trading, depending on the style that they're using. But the futures market itself is the best market for active trading because of the lack of the day trading restriction. Now, we call this next big thing. It's got some great tax advantages, futures. They're taxed at much better rates than equities or options. No pattern day trade rule. And also, just so you understand, the product was the biggest launch in the history of the Chicago Mercantile Exchange. The biggest in history, biggest product they've ever had to launch, okay, which is unusual. I mean, I was actually a market maker, one of the first market makers in the SPX pit when it started. So we had to make markets for us. This has been unbelievable for the mercantile, but it's also been unbelievable for the individuals because it's created a whole bunch of new products that you have lots of opportunities to create advantages for yourself. Now, I'm a big believer that there ain't no secret indicators, okay? We have no secrets. We have a proprietary algorithm that reads the market very much as you and I might read a chart. The difference is that it's never subject to an opinion. It's a straight mathematical model, okay? We just follow our rules. You cannot beat anything if you're trying to always outfigure, outsmart, or outthink the market. It does not work. That is one of the many issues that traders and investors in general deal with, is the violation and always looking what I like to call the shiny keys that don't show up. And of course, they end up usually in very poor financial condition when it's all said and done. So again, we want to make sure that you can learn to follow rules. So if you can't follow rules, it's hard to be a member with me because I'm very tough when I'm teaching and with my students. All we're playing, I know you heard this probably a lot of times saying, you'll hear it more, is probability, okay? The whole trading game is a probability model, okay? You're competing against other traders. It is a competition, but it is really nothing more than a game that you are competing against others. And the key is the better player, the better trader, the one who understands better will make the money. It's very much that simple. When you think about it, I mean, any of the four mathematical games that you might have played, poker, bridge, backgammon, or gin, the better player will always win eventually. They may not win today, but over time, they will grind out the edge over other traders. And that's what you're trying to do. Your job is to make money and to grind out the systems and to make money by following rules and only taking the highest probability trades, which are established by the algorithm, okay? Now, just a quick note, this is from a professor at Cornell. Todd, very impressive market analysis. Yours is the best in the world, most consistent methodology, most rigorous, drops emotions, don't listen to the pundits who comment on casually based and reading the news. And again, that's a very common thing. You know, if you're watching the news right now, you're being somewhat manipulated by the news, whichever side you're watching. It doesn't matter. You can watch Fox, you can watch CNBC, whichever news you're watching, one has an opinion that somehow seeps into the mind of many traders, which is something that you have to eliminate. Because if you don't, you're going to cause yourself great problems through your trading career. That's why professional traders are rule-based. I don't make a trade without the rules supporting what I'm doing. It doesn't matter if I'm day trading it or if I'm using the algorithm, which is what I use predominantly. I do not violate the rules. I don't try to outguess, outsmart, or outthink the market. Because at the end of the day, I know what my method does. I know what it's proven time after time, year after year, and the amount of profits that we make. So learning how to go through the drawdown phase and the other things that go with it will allow you to actually not only make money, but grow your account over time. The basic of algorithmic market trading is very simple, okay? You follow the rules. If you're playing subjective or gambling, we have no opinion, okay? Now, I have an opinion. I do a daily update every day. Now, I give my opinion like we've been long oil forever, and I hate it. But I won't. I'm long it with everybody else. And, of course, oil's up about $2 today, and it's up about $12 since we bought it, okay? In the meantime, we don't time the trades. The algorithm will tell us when a trade is to be made, whether it's a reversal to the long side or reversal to the short side. We just use the facts of the algorithm. We do not use any other information because, again, all that really is doing is reading the price action of the market. Okay? You make every trade no matter what. The minute that you decide that you can outsmart the news or get past the news and play it, you lose. Because those who are opinionated, emotional, no facts, and handpicking always end up losing at the end of the day. Now, our rules are very simple. To win at algorithmic mechanical trading, you must have no opinions about the market. Zero, none, nada. If you violate rule number one, you will lose money. And we have a saying here at Bubba Trading, trade the news and you lose, okay? All trend is the basis of all profit. If you do not understand that, you should not be trading. Again, we want to be with the winds of the market, whether they be up or down. We don't care which way they're going. We want to be with the trend. If you pay attention to news, you will lose money. If for 1 minute you think you know more than the market, price is too low or too high, the markets will take your money. It will always punish traders with so much hubris. We never sell at the top, nor do we buy at the bottom. That is for fools who insist on being right as opposed to making money. If the market is going higher and you are short, the market is right and you are wrong. And conversely, if you're long and the market is going down, you're wrong. I don't care what anything says to you. If the market's going down and you're long, you're wrong. And you're going to have to make a decision for that money. The objective in mechanical trading is to mirror the market. You want to always be doing what it's doing. And if you do with all the probabilities on your side, you've got a much bigger edge, which is trend mechanical trading gives you a statistical edge you cannot obtain elsewhere. Profitable traders understand that edges are essential to long-term profitability. That was one of the edges of being on the trading floor, is by using a set of rules for floor trading. There's always a plan and always a rules for whatever you're going to do. And this is somebody who went off the rails, and I like to share these because I've been following Broccoli for about a year and a half. Since I've been following him, my account has steadily gone up greater than 100% in the first year. This isn't say there won't be periods of pullbacks or drawdowns. There will be, and they are inevitable in any successful trading system. They will be stressful. When they occur, hold your positions, follow the new trades when provided, and don't overthink the process or overvalue what you're hearing. Think you are seeing in the charts. If you follow the rules and stay the course, writing account net liquidity will be rewarded. In the meantime, the few times I did stray away from the program, I cost myself money. And that's really the point. When you stray, you typically lose. Because again, if you're trading by a model, by a system, by a plan, that's the way in this industry that you make lots of money. If you get away from it, that's when you bring more risk into the equation. Now, what are our objectives? Well, obviously, everybody's objective who's here is to make money, right? I mean, nobody's here not to make money. We're here to make money. Our other objectives are, we'd like to try to keep the variances small. We can't always control that because, again, our trades are automatic. Okay, they either are or they aren't. We never change a trade during the trading day. All new trades are issued at about 3 a.m. Chicago time. And of course, some of the markets don't open until 9:30 or 9:30 Eastern. But again, it doesn't matter. Our method is not based on getting in at a certain price. Our method is based on being long or short because there's all types of different entries where people get in. And it doesn't really matter because I've got people all over the world that are trading that don't all get up at the same time. So again, we want to be balanced, which our portfolios are. We want to try to keep the drawdown small, which typically we do, but we've had some big drawdowns after some major rallies, which is not unexpected, which I would, quite frankly, when you see the results, I'm expecting one any day or any week now. Now, managed futures with trend trading, again, Richard Dennis, my buddy, a good trend following system will keep you in the market until there's evidence that the trend has changed, okay? Successful traders always follow the line of least resistance, follow the trend is your friend, which you've heard many, many times from other people. But again, it's a fact. If you can stay with the trend, because nobody knows how long this trend is going to last. Who would have known that gold was going to go from 1,500 to 2,200, okay? Or silver was to go. I mean, again, there's things to understand and know what to do and know how to trade them as well. Now, when we talk about the family office, it's the Bubba office, all right? You know, if you've ever heard of a family office, those are where the very, very wealthy go to play and invest. But obviously, most people don't have that kind of money, so they don't have the advantage of a family office. But we create our own family office environment with a full chat room, with training classes, with many things that will help you be successful, answer questions. And of course, we're going to have a training this Saturday as well. But in the meantime, we're here to make it best for you. We don't want to touch your money. So when I say manage futures, you're managing yourself. You're getting managed by the use of the trades that I'm sending you. It's not an account you open with a third party. You hold the money yourself. You make the trades. We send them to you. And of course, we also have what's called letter of direction trading, which we'll get into more as we get through the presentation. The biggest key in trading in general, and again, take some of these notes for yourself, whether you become a member or not. I want you to be ready for these things because the biggest key in trading is your emotions. You know, there was an old saying on the trading floor when people were yelling and screaming, and back in the days when it first started, it was crazy. I mean, though later in years, it became much more stable, but in the beginning, it was a wacky. Okay, and you could see, there was a saying, if you could see somebody's tonsils, you knew they were wrong, give them whatever they want. Okay, because the keys are always the same: emotions, discipline, patience. Because if intelligence were the key, the whole world will be making a fortune trading. So keep that poker face. Again, don't get too high and don't get too low, no matter what you're trading. That will come if you stay through your plan and your guidelines. You will have a perfect understanding of how your emotions should be. Now, in trend trading, price is everything. Okay? Ignore the news. Because again, I don't care what market is. I don't need to know what the actual product or stock or whatever I'm trading, because it doesn't matter. Price is price, and patterns repeat in all charts and all time frames. So it has nothing, it does not apply whatsoever to the advent of trend trading or mechanical trading, because again, that's where the news gets you in trouble. So don't think you have to know the name of the symbol you're trading. Know how the price action works, because in the end of the day, you buy a future when it breaks out of the range, and if it breaks down, you sell it and reverse it. Right? That's exactly that simple. It isn't complicated. Don't get out before the trend changes. Now, many people, and I always love to tell this story because it's really applicable, but if anybody remembers last October, okay, I'm going to just show you this real quick. If I can drag it over. Unfortunately, I left it on my other screen, but I'm just going to pull it over here. So last October, when Amazon reported earnings, okay, it was, people got nervous, they were scared, they were worried, because we've been long the NASDAQ for an extended period of time. Right here is the period I'm talking about. And everybody goes, oh, do we sell? Should we sell it? Should we sell it? I said, look, you wait until the pattern changes. Until then, you do nothing. So if we take a look at the NASDAQ, and there are a few that always can't take the pressure and did sell. In the meantime, here's the pay where they wanted to sell, and here is where you ended up selling it at. Right on this break here, we were long the NASDAQ last year, 48 out of the 52 weeks. We had short right here. Okay. So again, my point is don't let other things influence your decision. For any farmers out there that are always worried about the dollar's been getting hammered, yet grains continue to go lower. Stick to the system, stick to the rules. Don't be the amateur traders that want to be right versus making money. Which do you want to be? Do you want to be right, or do you want to make money? So again, you get no rewards for being right if you're losing money. So it's easier to be opinion free and let market price and direction tell you. Because if you know what your win rate is, okay, ours is 66%. This is over thousands and thousands and thousands of trades. We hit 66% of our trades. What does that mean? Well, A, it means it helps you in money management. It also helps you predict when a bigger rally may come, when you may decide to add to your positions. You might decide to grow your own account, because we believe in internal growth or organic growth. We do not ever add money to an account. We use the money we've made to continue to grow accounts. And you will see that very example very shortly. But again, your win rate is important. Whatever you're doing, you should know, because it will help you trade better and know when your trades are most in your favor. So understand whatever you're doing, what your particular win rate is, so when you know when to expect to be in a much more high probability situation. We only trade a probability model. I could care less about anything else. Nothing matters. It's the same as when I play poker. It's the same when I bet on anything. Any type of game playing I do, I always have an edge. If I'm going to play, I might not win, but I've always got the edge. Okay, so that's, again, we're always in probability mode. We're never trying to say, let me see if I can time this early and catch it. There's no point to it. Okay, because I can give you examples over examples. Now there's another comment from somebody. Thank you so much for making the changes to the 72K. You're so successful. You still take care of the little guy. You're always ahead of the game. I admire that. You're an inspiration to me and an example to follow. Thank you. And again, listen, my job, the way I figured, I've been very lucky in life. I've done very well. And again, I can just trade, but I do like to educate people that have been either lost money or don't understand it, because again, one of the problems in this country is financial literacy, which is why I have a high school program that I donate right now is in 600 high schools that we donate to them. Nobody pay, I pay for myself. But in the meantime, it's to educate our youth in financial literacy. And they actually learn all the way basics up to, some of them have got to advanced trading, but very rarely. But again, they get a book on how to understand it all. And that's what we're always working on, is to continue to educate, because at the end of the day, I want to educate my members, because I want them all to make money. I want a happy place, right? I want my chat room to be happy, which it always is. Now, we've got basically 4 base portfolios that you can choose from. Right? We have one, and the numbers are the names. So the 28K portfolio really takes just a little bit more margin just right now, but about 10 grand in margin. Okay, so we call it the 28, but you open the account with 28,000. Why? Because we want you to have enough margin to overcome a drawdown when it comes. The worst phone call any person ever gets is margin call. Okay, so we want you to be prepared that if it does happen, you're prepared for it, versus wondering, do I puke out? What do I do next? We're always taking the thought process out, which is why we want the required amounts we want, because it makes sense and it will allow you to grow your account much faster, much cleaner, with no emotion. We have the 17,000, or the 17K we call it. Again, it takes about 6,000 margin, and that's about 3 times, that's close to 17. So again, we're always using basically a base of about 3 times margin. The only one that we skimp on a little bit was we have 2 5Ks. Now the original 5K used to have the right margin, but it has some commodities in it that, when oil went crazy, margins rose. But in the meantime, we do have another one that's 1189 using, but they both take 5,000 to trade. So again, it's always about using the right amount of money to trade what you're trying to trade. We're not using all the money. We're not pouring it all in. We're using 1/3 to 1/2 of the capital to continue to grow our accounts, but also keeping us in position should a drawdown occur. Because again, of course, we know one thing for sure: markets don't announce themselves, and neither do drawdowns. Okay? Now, this is the actual 28K portfolio. This is live. This is as of this morning. Okay, these are our positions. We trade in 18 markets that we're always either long or short. We are never out of the market on either side. Okay, so right now, obviously, you can see we're long a lot of currency. Actually, we're long a lot, right? We're short corn, we're short beans, and we actually reversed wheat this morning. So we're only short the grains. We're long everything else, including the NASDAQ, the Russell, the S&P, natural gas, crude, the yen, gold, silver somewhere. Okay, so we're long all and have been so for many, many months. Now, again, one of the things you won't see here, but most of our trades last a good period of time. Why? Because we do not trade them, but sometimes we have to roll them over. You know, when you get to an expiration cycle in futures, which depending on the product, they have cycles. And of course, the most common ones are the financial ones, you know, the S&P, Dow, Russell, and Nasdaq. They're the ones that expire on triple witching. So again, but we're always in either long or short. And these shaded areas are what we call mega trades. These are $500 winners or bigger. And you can see, obviously, silver's like a $7,900 winner. But it's scary at how much money we've made on silver. But I'm not giving it back. Okay? Now, these are the stats that I send you. I send you every Saturday morning to all my members how we did for the week, what we have, where we stand, and you get this. So right now, these profit factors are out of sight. Now they're not going to be like this all the time. This has been one heck of a run, okay? That is just it's undescribable what's going on right now. But at the end of the day, it doesn't matter. We're on the right side of the market. I could care less. I don't ask why. I just ask how much. And of course, we trade 18 markets right now. We're down in 3 markets. Okay, well, we're actually down in 2 because the wheat's a little bit of a winner right now. But in the meantime, our average winner is about 1,100. Our average loser has been about 30. Okay. Again, that can change. This should normally be a great profit factor that people love to brag about is about 2 to 1. Ours are typically 8 to 12. So we make a lot of leverage. And these are statistics from the beginning of these portfolios, which goes back to just over a year ago is when the micros came out. So we've got an open trade profit in 2020. Actually, it's much bigger today, but I didn't have time to recalculate. I mean, that doesn't matter. It's 71% this year. It's up 123 cents since inception. Right? That's exactly the numbers in which you will see every single week. And of course, those are based on never making the trades bigger. It's always on what we call flat trading. But of course, we teach you, if those who want to, how to press or move up on your portfolios and add positions, because most of my members do so because they've all made so much money that they understand that they want to put more of it to work and how to use the right timing to do so. This is the actual equity curve. So you can see the equity curve from the beginning to now. It's making new highs. You can see the money. All right, now again, you see the losses too. I don't hide anything. And I'm going to show you the full run in a minute, but I couldn't, it's too hard to get it on the screen. Okay, so here is actually some of what I just showing you, but I'm going to show it to you the full run so you can see it for yourself. A little small, which is why I always put it onto a slide. But here is every trade, okay, every week since the inception of the system. Okay, this is every single week. So every week, every Saturday morning, rain or shine, win or lose, I send you out an update. Whatever numbers they are. There's nothing I can do about the numbers. The numbers are numbers, and I'm certainly not going to try to mislead or put somebody in a bad position not understanding it. So you get that every single week and every portfolio that we do, including the equity curve, and then of course all of the open positions. Now the 17K is a little bit more conservative. It takes out natural gas, actually mini natural gas, mini crude, and it takes out what we call the 10-year notes. So this is a little bit more conservative, which is a great portfolio, which is doing unbelievable. But again, doesn't matter. Same positions. Now remember that the 28K is like the boss. It's whatever's in that portfolio, whatever direction, will be in the same in all portfolios because every other portfolio uses some of the components of the 28K to try to balance them out so that if there's some choppiness going on, we don't get hurt. And if they continue to explode, then we're always in the right position because eventually we'll be either long or short or mixed. So again, that's things that we're always focused on because again, we want to always be in the best position. Now here's the statistics for the 17K again. These are laughable. I mean, they're not, listen, they're either that they are right now. I cannot change that, but they will be somewhere between 8 and 12, as I said. But again, this is up 232% since the inception. It's up 158% this year. Now, considering we've been long the S&P, Dow, NASDAQ since the end of March. Okay, so again, it happens, and again, we don't guess it. I mean, certainly it's a little scary now that we keep going up all the time, but again, who am I to change it? it is what it is. Here is the 17K equity curve. Again, it's exploding as expected. And then the 5K, there's two, but here's the original one that just has a little bit higher margin. It's got products, it's got gold, it's got NASDAQ, it's got soybeans, it's got the Dow versus just grains and currencies. So again, these are the models that you can choose from, and you can see the return here as well. Again, all of our portfolios have had very dramatic returns because, again, if you follow the rules, you will put yourself always in the best position going forward. And at the end of the day, that's all we can do is to be in the best position. And this is the new 5K, very basic, okay? And again, it doesn't have enough time to have statistics yet. So, obviously we don't have much to go on yet, but we will. And of course, you'll get them. Now, I'm gonna show you my portfolios of the 28K. You see my name. I just took out my account number, obviously, but this was from February. Now, in February, I was trading one contract of each. I had originally put, even though you're supposed to put 28,000 in, I put in 15. Why? Because I've got 7 futures accounts. This is just one of many because I trade all the portfolios. But just so you can get a perception of the money. But in the meantime, I wasn't worried about the margin. So we got to 22,000, not bad, 50% return in about 4 months. Now I got to be able to press to 2 contracts, and the account grew to 34,000. Okay, and this is as of April 4th. This is July 2nd. We got the 42 with 2 contracts each in it. And then we got the 3 contracts each on July the 11th and up to 45,000. Okay. And now today, as of this morning at 5:58 a.m. Central Time, here's the account. 3 contracts each with that in the account right now. That's a live account. It's trading right now. Okay. If we have time, I'll pull it up where it stands right now. But I mean, that doesn't matter. Okay. Again, my point is we're going to have drawdowns, we're going to have problems, we're going to have losses, but at the end of the day, they continue to grow. And that's all we can do as a trader or investor. And that's what we're looking to be going forward, is to always be in the right position. That's a great question, Glenn. I will answer it real shortly. Okay, but it's a great question because there's a couple ways. Now, these were results. These are old results. Okay, I didn't want to. Again, it's kind of embarrassing to put up the results I say are right now. Okay, I know what they are. You'll see them, and all the members see them. But again, I'm never trying to really sell anybody. I want people to learn our business and become part of our team that want to grow their accounts and get to the next level of trading without a lot of stress. And listen, many works, they don't have time. So it's just a great method that many can use for themselves and not have to worry, okay, because everything is automated and done and ready to go. Okay, so again, these are things that we show, but again, you can see by the numbers themselves how 88,000 was 15. So what kind of return is that? Okay. In the meantime, I have a margin account at IB. Can I trade this account, or would it be preferable to trade it account separate from futures? That's really up to you. I mean, I don't know how active anybody is, but if you're active and you want to keep exact track of the algorithm, then you should probably keep a separate account. If you're not concerned and you know you're a smart, disciplined person, you can put them all together. It doesn't matter. Okay. If I open a separate account trading 128K or 128,000, how much should I fund with? I've not traded futures before and have no idea how their margin works. Okay, you put in 28,000, and whatever the name of the portfolio is, so if it's 28K, it's 28,000. And all that is basically a model of 3 times the margin, so that you are equipped to handle anything. So you put yourself in, and you're ready for a potential drawdown. I'm in Central Time and not really a morning person. Not many people get up when I get up at 1:30. So with your alerts coming out around 3 or 4 a.m., I wouldn't be making the trades until 8:30 and 9 o'clock. Is that okay? Of course it's okay. It doesn't matter. Again, entry price is not important. Again, because there's times when if you got in real early, you might get a better entry, and there's also times you might get a worse entry. It doesn't matter. Again, we're not worried about entry price. We're not in the trade for a tick or two. We're in the trade for a home run. Every trade we go on is designed to be a mega or a home run trade. Some are, some aren't. And some go big and some, again, but they never go down big because eventually they reverse and go the other way. If I decide to automate trading, CTG, what is the cost? How do I get set up with them? All right, well, I have a letter of direction broker, if you don't want to trade it yourself, which is fine, but you open an account with them, and they actually do the letter of direction for all of our letter of direction people, which is in the hundreds. And they execute every trade at 7:30 a.m. Eastern time. But their cost is, I don't know the exact what they charge, but it's less than some of you guys are paying for self-directed trading, but it's nowhere near what typical managed commissions are. They understand what we're doing. They're very fair, and they want to make sure that they take care of the customer, because that's their number one job, is to be customer service oriented, because obviously we've got hundreds and hundreds of accounts with them, and we'll get more. If I start on your own monthly plan, can I switch to annual? You can always, listen, I'm very flexible. You can always switch to annual if that's your decision. You can, again, I want people to be happy making money. I want people to learn. That's my whole objective, is that phase of this, is to have people learn how to get to the next level. Too many people have been either taken advantage of or made advantage of themselves and lost their money on more than one occasion trying to outfigure the market. And again, I always say, why do you want to do that? It doesn't make sense. And I'm not telling you what you don't already know. The markets are the markets, and the hardest part is focusing on your trading plan, okay, which is what we focus on consistently. We are trading micros, yeah. Okay, I mean, I trade them all. Okay, I'll just share this with you real quick. I don't have today's version, but I do have Saturday's version. This was the grandpappy of all the portfolios of it started. This one's been running since before 2016. I only show results since 2016 because I never show a product that I cannot back up with the real results, the results. So, but this has been running since November of 2016. It trades 29 markets, all the big futures. So it's 226,000 portfolio. It takes about, right now it takes about 100,000. But here's every week I can only obviously only get so many weeks on here, but this is from 2017. This is about 2 years, almost 3 years worth of data. Every single week, over and over again. And of course, again, at equity highs. But that's not the point. The point is that it works. And of course, the statistics here, just a quick look. Again, this portfolio is up since inception. It's actually up almost 900%. Okay, and I do know this, that this balance is well over $1 million right now, starting with 226. Okay. Anyways, can you advise when would be the preferable time to initiate the positions? Okay, this is always a question, and look, there's no way to time the market, which is what I've said repeatedly. So you just get when you become a member, you open up all the positions as they are today. Okay, because we know one thing for sure. If it's wrong and we reverse, we're going to be reversing anyways. But we need to get in the market, because if we decide to try to wait for it, you don't know how long it's going to last. Who would have thought, gold will be going ballistic every day? I mean, I write for Kitco every day, and even I knew I always maintained that we were long, but there was times I was more bullish than others. And certainly, again, who would expect silver to make $9,000 on a mini contract? I mean, again, these are things, so there's no point to try to guess it. It's just easier knowing that you reverse when it changes. Now, every day you get an email update from me. It's either way, no trade or trade. I send out an email every morning about 3 a.m. It doesn't matter to you, but that's the time they go. Okay. That's what everybody has them at the same time. And those who are awake and want to, some of the markets aren't open yet, but let's say it's open, they can trade then. Again, I don't personally trade. I let CTG do my trading on 6 of my 7 futures accounts. They execute every trade at 7:30 Eastern time. I don't try to outsmart what's going on. Everything is automated. I only keep trading one of my, well, I keep a day trading account, but my portfolio account, I have one portfolio I call a hybrid that I'm playing with, that I trade. But the other ones, they do everything. And also at the same time, out goes a text update, just so you have it, in case you don't get the email. For whatever reason, we text and email you everything at the same time in the morning. And there is never a change during the day. It's either, if there ain't a trade in the morning, there ain't gonna be one until the next day. You can bet on that now. Now, every week I send you a little report. I write up about the week, good or bad, tell you what's going on and how to understand the markets, because again, we're very, to me, it's very important that you get an understanding of the markets. Do you always use the front month contract? Almost always. I mean, there are times when, for example, in oil and some of the other more volatile commodities, we will typically move past, we'll move past the front. Sometimes we even move to the slightly illiquid month because it doesn't matter. We're not changing so fast. What we want to stay away from is those, you know, if you've ever traded oil before, what happened when it went negative. I mean, I actually wrote about oil going negative before it did that morning. But again, I'm not trying to toot myself on the back. I'm saying we like to be away, because commodities, unlike equities, when they expire, they can have unbelievably wild moves because there's a whole bunch of other components that go with it. They used to, in grains, they call it the silo squeeze. In oil, you know, no place to go with it. So again, it was pretty easy to call it. It was going negative. But again, the volatility was crazy. So we're going to roll past it. But we're usually in the front, depending on the often of expiration. Right now, we're long December oil. So there's a couple months in front of us. But again, we didn't want to be in the news cycle of crazy moves, because our algorithm not only does it check price and time, but it also uses, it adjusts up or down to volatility at how fast it's going to change. So we don't make a lot of changes. Okay. And yes, the results were trading micros. Okay. The results were trading micros. And if you'd like to know who the letter of direction broker is, send me an email at bubba@bubbatrading.com. I will send you their information and a contact over there. Again, it's up to you. I have other brokers and other accounts, but again, I prefer them because they do all my letter of direction, and they're the only ones I trust, because others have tried to copy or steal my signals and put them out as their own. So we're very careful of who we share them with. In the meantime, Saturday, but we do a lot of training, and there's probably right now probably 25 training videos that are in the system, which when you become a member, they're underneath your membership. You can watch them anytime you want. But this Saturday, I'm going to do a training as well, because, you know, I can always tell that when it's time, that when there's some questions coming up that I haven't seen before, so I know it's time to do a little training. But we always do that. So if you want to take advantage now, I'd love to have you as a member, but again, we want happy members. Okay, you get daily text and email updates, the weekly portfolio update, training sessions, live and recorded, and letter of direction trading available. You want to join me today? Okay, it's $129 a month. It's bubbatrading.com/micro. Or if you want to become an annual member, it's $1,400, and it's bubbatrading.com/micro year. So those are your choices. And again, love to have you as a member. But again, I want you to be also comfortable and happy with your final decision. Do you ever, I never modify the rules. Never, ever, ever. If you modify the rules, what are you actually doing? Think about this for a minute. We can go through this, okay? What are you doing if you modify rules? Okay? You're imposing your opinion into the market, okay? Why do you want to impose your opinion into a method and a model that works? Okay, that's always the key point that many seem to lose sight of, is why do I want to change what already works? Why do I want to try to be smarter than the market when I know what I got on now is working? And if I start adjusting that, what does that tell me? That tells me that I'm now trying to be smarter than the market. Okay, and those who try to be smarter than the market typically end up out of the market. Okay? Now, I'm going to give you a quick view of this right now. I got to shoot it so I can show it to you. I can't pull the whole thing over. I could, but it's got all my accounts on it and my numbers. So I'll just take a quick picture of it real quick. Snip out I'll snip out the little the totals right now. I made one mistake. Hold on. Sorry, guys. I'm not a good technology guy, other than knowing how to use my rules and my algorithms. Okay, this is a live shot as of right now. Okay, it's up today 5,500. Okay, 86,420 in that account right now. Okay, it was actually over 90 this morning. Gold and silver must be selling off a little bit, but anyway, it doesn't matter. Again, I hardly ever look at these. Okay, I never change the system ever. There's no point to. Again, I know my win rate. I know how we do. I know what we do. So why do I want to change success? It's going to go into a drawdown. Again, there's no, I showed you the actual live results. Okay. I showed you 2 years worth of data. It's going to happen. I already know that. But again, the key is when you look at the equity curve, okay, this is one of the keys that we teach when we're training. Okay, I'm just going to flip back here real quick. Everybody that's in my program was adding from 1 to 2 under 17K right here. After this big drawdown, we made new highs, big drawdown. We had plenty of money that we'd made, that we'd earned. Not that we were borrowing, or not that we were putting in new money. It's money that we earned. So we use this as a potential spot to press. That's why the mean continues to stay there. You're always tracking about the mean. So when you get enough equity and you've made enough money, not added more money, made enough money, you then add to your system. If you choose to, you can add to your product. Okay, that's all we do. That's how I got from 1 to 2 to 3. That's how I'm in 10 of others and 5 of others, because that's how you use the money that you've made to build yourself a better model. Okay, so I have room for 50 people today. Again, listen, I'd love to have you as a member, always. Okay, but again, if it's not for you, hey, I understand. I'm not concerned about it. Okay. Okay, send me an email. I will be happy to send you the broker for letter of direction. Okay, it's CTG Group, which is the name of it. It's Charlie Tango Golf. Okay, they're a local Chicago outfit that I've been with myself for 11 years, and also I've known them, the 2 owners, which one of them will reach out to you if you decide you have some interest. Now, you don't have to sign up with them, but that's up to you. But you can talk to them, and I have Nell Sloan and Pat Lafferty. Okay, again, they've been in the business for 50 years. So they, not 50, but in the 30s. I don't want to get carried away. They've been in the business in the 30s. Okay, so again, they understand it. They've been around, and their job is to execute exactly what we do. Okay, and I'll be more than happy to share their information. Just shoot me an email at bob@bubbatrading.com. No obligation, but again, if you want to become a member today, I mean, it's bobatrading.com/micro or micro year. Again, look, we're going to eventually in the next, 6 or 7 weeks, halt the selling and the marketing of these products, because again, I have to clear space and make sure that we're watching liquidity in all products, so there's not a problem, but also because again, it's in such demand that, I don't want to, I want it quietly out there, not loaded out there. You probably haven't heard about it before. So again, that's just what we kind of do. We like to be more kind of private. Okay. So it's for us to, do our thing and help you as best we can. So again, I've got about 50 spots open. Great if you want to become a member. If not, hey, thank you so much for spending some time with me. I certainly appreciate it. And I'll be up to Nebraska right now to meet with some farmers. But in the meantime, it's been a pleasure to be part of your event. And if there's no more questions, I'll be happy to turn it over so they can catch up on time if they run late.